In the world of investing, true wealth often comes from having conviction, the kind of belief that allows you to see potential where others see uncertainty. A perfect example of this is Nvidia. A year ago, few could have predicted the staggering success that Nvidia would achieve. Even visionaries like Elon Musk and Mark Zuckerberg couldn't have foreseen it. But there were those who did, those who believed in Nvidia's future so strongly that they chose to invest. These investors weren't just taking a gamble, they were making a calculated decision based on their deep conviction in Nvidia's potential. Today, they're seeing the fruits of that belief. But this kind of conviction isn't just about picking a successful stock. It's about understanding the broader trends that are shaping our future. Just as Nvidia's success was tied to the growing importance of AI and computing power, another transformative trend is on the horizon: the rise of Web 3.0 and the power of decentralization. We currently live in a Web 2.0 world, where our digital lives are largely controlled by a few massive corporations. Think about how much of your day is spent interacting with platforms owned by companies like Google. For many of us, Google is almost synonymous with the internet itself. As a YouTuber, I spend more than 8 hours a day on Google's platforms, just like millions of others. This level of dependency is convenient, but it also comes with significant risks. Consider the story of Mark, an ordinary man living in the US. Mark relied on Google for almost everything: managing his schedule, communicating with family, storing important documents, and even tracking his health. One day, when his son fell ill, Mark took a photo of his son's condition to send to their doctor. But Google's algorithm flagged the image as inappropriate, and his account was suspended. Despite clearing his name through a police investigation, Google never reinstated his account. This incident highlights a critical flaw in the Web 2.0 model. When we place so much of our lives in the hands of centralized corporations, we become vulnerable to their mistakes and their power. This is where Web 3.0 enters the picture. Web 3.0 isn't just an upgrade to the internet we know. It's a fundamental shift towards decentralization, giving power back to individuals. Imagine a world where you don't have to rely on a single company to store your data, manage your communications, or even process your payments. For example, platforms built on the Bitcoin network allow content creators to receive payments directly in Bitcoin without the need for intermediaries like banks or payment processors. This is more than just a new way of doing business. It's a reimagining of how the internet and the economy could work. However, embracing this new decentralized world requires more than just understanding the technology. It requires conviction. Just as Nvidia's early investors saw the future of AI, those who believe in Bitcoin and Web 3.0 see the potential for a more open, equitable, and secure internet. But with that conviction comes responsibility. Many people are intimidated by the idea of managing their own Bitcoin wallets, preferring to leave their assets on exchanges where they feel safer. But the truth is, this is a false sense of security. When your assets are on an exchange, they're still under someone else's control. To truly embrace the promise of Web 3.0, you need to take control of your assets, starting with moving your Bitcoin to a personal wallet. Modern wallets are user-friendly, and by managing your own assets, you protect yourself from the risks that come with centralized exchanges. Ultimately, those who achieve true wealth aren't just those who get lucky. They are those who have the conviction to act on their beliefs, to invest in the future they see coming. Whether it was the early investors in Nvidia or the pioneers of Bitcoin, those with the vision and the courage to invest early are now seeing the results. But as with any investment, this conviction must be tempered with caution. Diversification remains essential. Yes, believe strongly in your investments, but also remember that a well-balanced portfolio is key to long-term success.